Dymension is a brand new cryptocurrency that very well might go from $7 all the way up to $375. In this video, I'm going to explain why DYM fits my thesis, why it has a very clear value capture mechanism, how you can stake it for over 40% returns, and at the same time qualify for dozens of airdrops. The DYM ecosystem is brand new. This token has a hot narrative. In this video, I'm going to break all of this video down, and remember, I'm bringing you the alpha and you press the buttons to support the channel. Let's dive in. The first thing that I want to highlight about DYM is the successful launch, right? They airdropped all of the tokens to the community. It launched at a price of around $3.95, is currently trading at a price of $7.75, with a market cap of just over $1 billion and a fully diluted market cap of $7 billion. Yes, that is a massive discrepancy between circulating market cap and fully diluted market cap, but that is something we're going to be talking about later. Further, expanding on that massive airdrop that happened, if you didn't know, DYM airdropped hundreds of millions of dollars in value to their community. If you staked Celestia, if you used Arbitrum, if you used Base, if you used Optimism, if you used Wormhole Bridge, if you owned a Pudgy Penguin, if you owned a Tensorian, if you used the Drip House, there were so many different points of qualification for this airdrop that many users got literally thousands of dollars for free. Pulling up a more technical chart on TradingView, one thing that I think was really interesting and highlights just how inefficient these token launches are, on KuCoin, when the project launched, it went from 48 cents all the way up to $25 with a gain of over 5,000%. If you were live on that day, you would have watched me send DYM to KuCoin, sell it between $10 and $11, and then rebuy on Bybit for just over $5. Very manual arbitrage, but if it works, it works. Again, I would like to reiterate that part of the reason why I think this token has done so well off the jump is people have learned their lesson from Celestia. Not only are modular blockchains way better in terms of throughput and efficiency, it is well known that if you stake them, you will collect a lot of airdrops. Post-launch, it has been incredibly hot, but we are now going to be talking about what the token actually does and how you can stake it. Just to highlight what the technology is and what it actually does, Dymension is a modular blockchain. That is a bunch of fancy words that basically means one thing. If you use Ethereum as an example, Ethereum is a blockchain where each decentralized application functions on that blockchain, right? There is one blockchain for many dApps. Dymension is different. Dymension is modular. Each decentralized application gets its own blockchain, and that is essentially brought in to the main blockchain. It is way more efficient and allows Dymension and other modular blockchains like Celestia to infinitely scale across both users and applications. Modularity. Price speculating for DYM, probably the reason you came. I'm going to do some back of the envelope math that more or less involves quite a few assumptions. I am going to operate on the assumption that it is possible for it to reach approximately the same market cap of Solana last bull run and somewhere in between the market cap of Luna, so between $40 and $80 billion. Let's say $60 billion. So DYM currently has a price of $7.64 with a market cap of $1.18 billion. For the sake of simplicity, I always operate on current market cap, because if the inflation rate is 8%, that is very inconsequential to our calculation, right? Because that takes 12 months to take effect, and that's really not going to skew our calculation that much. Fully diluted market cap is going to take a very long time to take effect. So if we operate on the assumption that DYM has a market cap of 1.18 billion at a price of 7.64, let's do some math. So the average price between Solana and Terra Luna was $60 billion. So we're going to take 60 because our base unit of denomination is billions of dollars. Let me zoom in a little bit. We're going to take 60 divided by the current market cap of DYM, which I believe was 1.18. And this is going to give us the multiple of price for DYM to get to that break hold level at $60 billion. So 50.8 multiplied by the current price of DYM at 7.64 times by 7.64 is going to give us a price target of $388 per DYM. But do we think that's realistic? Let's talk about it. Quick interruption to remind you that we have a Discord community full of endless free resources. These are designed to be free crypto training to get you from beginner to intermediate to expert, and I don't charge a single penny for what I do. So remember, join the Discord. You can find it by typing in discord.gg/learn-to-earn, and I'll see you there. If you need a closer look at what this technology actually is, this Medium article is very useful. So there's basically Singularity, there's 2D, there's 3D, and there's 4D. Dymension is 4-dimensional, hence Dymension. That is basically encompassing the idea that each application gets its own blockchain, and that is way more scalable. The initial launch included a phase to ensure that the Dymension blockchain acquired sufficient delegated stake. Checkmark. Establishing that all major IBC and bridging connections throughout the crypto landscape launched without a problem. Check. Proposing the first governance proposals for the Dymension protocol. In progress. Streaming incentives to single asset staking, deposit, and earn, and the various trading pairs will form the Dymension for liquidity layer, because that is the way Dymension works. There's multiple blockchains, but all of that liquidity is accessible across the chains because all the liquidity technically belongs on the main chain. Clear as mud? Get it? Got it? Good. Now that you understand how to stake the DYM token, let's take a deeper look at what the tokenomics look like, what the value capture of this token looks like, and how it is staged to be one of the most explosive layer ones in this entire bull run. People often say that a high inflation rate means the token's going to fail. Personally, I believe that is true in bear markets, but not in bull markets. Using the portal.dymension.xyz website, basically their homepage, we can see that there's 600,000 addresses. The current staking APR is 35.64%. There is 1 million DYM total supply, a current inflation rate of 8.4%, and 23.68% of all DYM is staked. So as more DYM is staked, which I'd imagine most people are going to do to capture those airdrops, the inflation rate will go down and the yield will go down. We'll talk more in depth about this. Essentially, the staking APR at launch was around 44%, but as the DYM blockchain gets used, DYM actually gets burned. So it has both inflationary and deflationary components. So I think if we're going to prognosticate long-term on DYM's emission, we basically have to see how much DYM is used in terms of how many roll apps are created, how many roll apps are used, because the people who launch roll apps, they need to buy the DYM token to access the DYM technology. That is very clear value capture. If you're feeling FOMO, that's justified. But frankly, you could have known about DYM for weeks or even months before this date. If you had been tuning in to the daily lives that I do on TikTok, you could have found out about DYM. Plain and simple. There's nothing wrong with catching up and learning now, but remember, if you were tuning into these lives and engaging in our community, you would have known earlier. To get a sense of how many people are using the DYM technology, this was the DevNet or the testnet for DYM. And I believe, it doesn't actually say, oh yeah, roll apps listed. There was over 1,000 roll apps listed. And so although it is unconfirmed, I would operate on the basic consensus that all of the roll apps that introduce into the DYM ecosystem will provide DYM stakers with an airdrop. Right? It engages the community, it increases liquidity, and it helps bring users into the ecosystem. So although the testnet had over 1,000 dApps, and those are launched basically free of charge, right? It's a testnet, it's not real money. I am expecting the DYM ecosystem to grow incredibly quick because not only does it have hype, everyone knows those airdrops are going to be flowing. Talking about DYM tokenomics, there is an initial total supply of 1 billion DYM. It is divisible to 18 pieces, 18 decimals, sorry. The initial issuance was 8%. That is this is basically the inflation rate. So the initial inflation was set at 8%, the max issuance is 10%, and the minimum is 1%. The target DYM staked is 67%, and like we mentioned earlier, the current DYM stake is 23%. So we are under target. Again, the token just launched 2 days ago. Take it easy. There's algorithmic issuance of DYM. So the Dymension protocol adjusts the DYM issuance rate based on the actual staking ratio. So if there's less staked, there will be a higher inflation rate, right? We're seeing 8% inflation. We're not at the staking target. There's a complex formula, blah, 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 blah. But the better question is demand, right? Everything comes down to supply and demand. Where do buyers and sellers agree on a price? DYM tokens are systematically burned as part of a validating bridge fee and protocol swap fees. Essentially, this means that the people who launch decentralized applications on the DYM technology need to buy the DYM token for it to work. Transaction fees. All fees generated from blocks-based demand are distributed amongst DYM validators and their stakers. So essentially, that means people who use the DYM technology, their DYM is burned, but when there's transaction fees related to the DYM blockchain, that DYM is exchanged to the stakers and the validators. Supply lockup. Roll app bonds reduce the circulating supply of DYM. So if someone wants to launch on the DYM technology, they have to validate a certain amount of DYM. This makes it inherently illiquid because they are taking DYM and they are bonding it to a validator to launch that roll app, which essentially means there is less available to sell and there's less available to buy. Plain and simple. There's some fees associated with validating bridges. There's some fees associated with protocol swap fees, and some more fees associated with the roll-up bonds. But essentially, we have technology that more or less is groundbreaking, and not only do people need to buy the DYM token to access it, the DYM token is burned as part of the functionality. That's powerful. To fully understand DYM, we have to take a closer look at fundraising. Not only is it key to understand what a token is and how it works, you got to understand who's backing it. Let's dive in. Using one of our favorite resources, Drops tab, it doesn't have all of the information currently available. The seed round took place February 9th, 2023, when DYM raised $6.7 million. They raised money from Stratos Technology, Big Brain Holdings, which is a very familiar name in the space, and Matchbox DAO. Ultimately, I'll be honest, the only company here that I recognize is Big Brain Holdings. I am expecting some more vesting information to come to light about what terms they came to, but there is a chance that they came to equity. I haven't been able to find that out yet. But that is one thing to keep in mind, is the vesting rate, right? The inflation rate of tokens to these early investors. That's one thing that I really like about DYM, is that they really didn't have to raise that much money to bring an innovative product to market. If you compare this to Celestia, which had private rounds, it had seed rounds, blah, 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 there is way more inflation to Celestia, or if you compare it to Solana or whatever token you want to compare to, there has been way more fundraising for other projects, but DYM by and large has been very lightweight to bring an innovative product to market. Staking your DYM is super easy. You start with your DYM on a centralized exchange, or maybe you airdrop some. You'd want to go install the Leap wallet. The Leap wallet is pretty much the best product in the Cosmos ecosystem for storing and staking. The reason I like the Leap wallet is because it has an airdrops tab where you can see all of the airdrops that you qualify for in that ecosystem. Right? The Cosmos ecosystem is known for airdrops. When you're withdrawing your DYM, make sure that you are withdrawing to a token address that has DYM at the start. That will ensure that you are withdrawing your DYM token to the DYM network for Cosmos. You want to make sure that you do a trust transaction first, just to make sure your tokens aren't lost in the nether. The next key step that you want to do to stake your DYM is that you want to choose a validator. Personally, I choose my validator. There's an option at the top where you can choose by delegation that sorts the most popular validators at the top. Pick something outside the top 10 that has 5% commission. That will ensure that you are eligible for airdrops. You still get that enticing APR, and you still have security and are protected from validator failure. Ultimately, stacking DYM is super easy, but if you need help, be sure to join the Discord.